Jesse, can I have more than one policy? Are policy loans based on your credit score? What's the interest rate on policy loans? Do you have to pay back a policy loan all the way before you can make another policy loan? Do I have to go to a doctor to get a policy? What company do you sell policies for, Jesse? Does it make sense to borrow at a 5% rate on a policy loan to pay off a 3% mortgage? I know you've got questions. Let's get them answered. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I help people live and leave a lasting legacy with infinite banking. Today we're going to have a Q&A where I've been fielding questions on consultation calls, on the social interwebs, all over the place, and I'm going to answer them here for your benefit. First question is, can you have more than one policy? Yes. So, a couple of things about that. You can have more than one policy on your life, on your person, okay? I have more than one policy that I have on myself, just me. And another thing is that you can own more than one policy on others that you have an insurable interest in. So, for example, I have policies on myself, multiple policies, my life, and I also own multiple policies on our children. So the answer is yes, you can own multiple policies or even have multiple policies on yourself. And in fact, when you go to implement infinite banking, that's the whole idea. Like Nelson said, we should be building a system of policies. The next question is, are policy loans based on your credit score? No. When you have a policy and you are ready to make a policy loan, you are the owner of that contract. When you call the insurance company or when you log in through your portal to make a policy loan, the two relevant questions beyond verifying that, yes, you are who you say you are, the insurance company simply wants to know, out of what's available to be loaned to you, how much of it do you want sent to you? That's one question that they'll have. And then the other question is, do you want a check in the mail? Do you want a wire transfer if that's an option? Or do you just want it directly deposited into the bank account that they have on file? So how much of what's available do you want sent to you, and how do you want it sent to you? That's it. It doesn't matter what your employment status is, your marriage status, your credit score status. It doesn't matter. What matters is that you own that policy, that you've been funding that policy, and that you can use it. So it's a beautiful thing to think that we could be proactively building capital where we have a guaranteed access to capital because we're the owner. We're the one in control. Now, if you really start thinking big picture and you're thinking about what finances can look like for our children or grandchildren or great-grandchildren, if we are building capital in such a place where we have ownership and control and the profitability, what does that mean for our children? How relevant, or grandchildren, or beyond, how relevant will credit scores really be for them when we can keep car notes and vacations and homes and the launching of businesses or engagement rings and weddings or anything else that we're going to do as a family at large? What if we could keep that in-house multi-generationally? How relevant are credit scores really going to be for us? That's for you big thinkers out there. The next question, here's another follow-up really on policy loans. What is the interest rate like on policy loans? So this individual was asking me, trying to understand, is it like a credit card and every month? So there's a simple interest that's charged on policy loans, whether it's 5%, 8%, 4%, 6%, whatever it is. The beauty, first and foremost, is that with a policy loan, you can be operating in a known interest environment. That's huge, especially when you start thinking 5 years from now, 15 years from now, 35 years from now, when I go to make a policy loan. Even now, I can know that I'm going to be operating in a known interest environment because I own this policy and I'm aware of what these policies do for me when it comes to policy loans, policy loan interest, etc. So be aware, be familiar with your policies that you either have or that you're going to have. And some policy contracts are going to have a variable interest rate, meaning there can be ebb and flow. These insurance companies pay attention to the market. They're making investments, these 100-plus-year-old companies, of course, so they're aware of what's going on in the market, and there will be rise and fall. Also, there are policy contracts where there is a fixed. I happen to have policies like that as well. So I have both types. Let me just go ahead and tell you, I really don't even look at that stuff or pay attention to that stuff. I don't know what the policy loan interest was on the last policy loan that I made. And I made one recently. I don't monitor that because I just operate at a high level when it comes to, now I know that's not going to suffice for some of y'all. Some of y'all, you're into the numbers and that's cool. Great. I love it. Me, I pay policy premiums. I pay extra, additional, unscheduled policy premiums when I can. I pay policy loan interest next, and then I pay policy loan. So just showing you my priority of cash flow to the policy. See, I just do infinite banking at a high level like that. I don't get bogged down in the numbers, but you can get as detailed as you want. And that's why I'm telling you, you could have fixed or variable interest rates. If you have an outstanding policy loan and you pay that back within the year that you took it out before your next policy anniversary date, and if you include paying off any policy loan interest, that 5%, 8%, 4%, whatever it was, if you pay that off, then that is very unlike a credit card that will not that will not compound into even any outstanding policy loan balance that you have if you at least pay the policy loan interest. Meaning if I had a 5% interest rate on $1,000 that I took out in a policy loan, I would owe $50 on that policy loan. Yes, 5%, $50 on that $1,000. Well, even if I don't pay back that $1,000 and I just pay back the $50 policy loan interest before my next anniversary date, that is not going to compound into my outstanding loan balance, which is a beautiful thing. That control that we have, that guaranteed access to capital, that ability to operate in a known interest environment for our whole life, incredible. It's a very powerful position to be in. The next question that I got recently this week was, Jesse, do I have to fully pay back an outstanding policy loan? Because this lady had an outstanding policy loan. She was doing debt recapture. So she was building up capital on a policy, making policy loans to go out and pay off third-party debts to get that cash flow back in-house. It's a beautiful thing. And her question was, because we're at the very beginning, she's just started first year using this policy, do I have to pay back that first policy loan that I took fully before I can make another one? No. You can have as many outstanding policy loans as you want, as long as you have cash value to be able to leverage. So if I have a cash value of, say, $10,000, and I recently took out a policy loan for $2,000 to pay for some expenditure, but then I have another opportunity or expenditure that comes up, I can still leverage more of that cash value that I have built in my policy because it's been built in there. So you can have multiple outstanding policy loans at a time. The answer is yes. The next question is, Jesse, what insurance companies do you write policies with, or who do you sell policies for? So I work directly with my clients looking to build a custom built policy for that individual or another policy into their system, of course. So I am appointed with more than one insurance company, but let me just give you a more general answer because, of course, when you're my client, you know which companies I would suggest that we use for your particular case. But in general, for those of us that are implementing infinite banking, we're really just looking for mutual life insurance companies that offer whole life insurance and that pay a dividend and in fact have a track record of consistently paying dividends for at least 100 years. So whole life insurance from mutual life insurance companies. That's the type of company because there are mutual life insurance companies and stock companies. I talk about that a bit more at length in our Encyclopedia series, where I cover terms, vernacular verbiage around infinite banking and whole life insurance. So feel free to do the deep dive on stock versus mutual life insurance companies, but it's mutual life insurance companies that Nelson encouraged us to use. So I personally own multiple policies from multiple insurance companies. I am a professional agent writing policies, not just from one particular company. I'm very open, and in fact start with looking at what's best for this client. Now, I have those that I like, but every case is different, of course. Jesse, how long before I can make a policy loan? Now, this answer is really simple. I'm going to give you the generic answer, which is 30 days. So 30 days from making your, even if it's a very first policy premium, within 30 days, you can make a policy loan. Now, tactically, practically, it may be 10 business days, okay? It's probably going to be an even shorter number of days to get access to capital via policy loans than 30 days. But if I say 30 days, that's going to cover virtually every company out there and type of contract. Virtually. Be familiar with yours. So I typically say 30 days, but it could be 10 business days, 7 business days. With an established policy, it could be just a couple of business days, and you could do a wire transfer. I've done that. That's a possibility as well. The biggest thing here, of course, is that you begin when you know enough that you know you want to do infinite banking, be about it. Pay a premium that's appropriate for you, that will begin to build a cash value, even if you're making monthly premium payments or quarterly or semi-annually, definitely annually. Of course, the more premium that you pay, meaning if you pay an annual premium, you're going to have access to more cash value sooner than if you're paying a monthly premium, of course, because by paying a monthly premium, that cash value is going to build up more slowly. And yet, the timeline answer is 30 days. But of course, practically could be much quicker. Jesse, is there a medical exam, or do I have to go see a doctor to get one of these policies? Probably so. Almost always so. Yes, typically speaking, of course, you're going to have ongoing conversations, and I hope they're deep. I hope they're deep. I hope they're meaningful. I hope you're building a relationship with your agent or advisor. Another step is going to be filling out a paper application where you're answering questions, where you're sending an application to the insurance company. And then after that, more often than not, you're going to have a medical exam where you're going to stand on a scale, pee in a cup, there will be blood drawn, you'll be asked about your back, your big toes, marijuana, all these different things, right? The insurance company is evaluating your life. So driver history, criminal background, financial background, it's all relevant. Don't be daunted by any of this. But when it comes to the medical, the answer is yes, typically. Unless you're just one of those stellar health specimens, it may be the case that you don't have to do a medical. Or minor children would be another example. But just expect that you will have to have one, and that will be a normal, that will be a normal step in your process of getting a whole life policy for infinite banking purposes. Jesse, can a parent get a policy on a stepchild? So here the answer is yes. Yes, you can get a policy on a child that you have custody, guardianship over, whether that's a naturally born child, whether that's a stepchild, whether that's an adopted child. So the answer is yes, that parents can get policies, and I would say that you should, when you can, you should. Both for the protection and for the infinite banking, for all of it. It just makes sense. We have this great asset, which is our life. All the other assets are based off of that. We should be protecting them. Yes, I know that Nelson says our need of finance is greater than our need of protection. You get both with whole life insurance when you're going to implement infinite banking. So the answer is yes. Children can and should be insured. Grandchildren can and should be insured. There are so many advantages. One great advantage, of course, is that children typically don't have the same underwriting process as adults do, like I answered in one of my prior questions about the medical. And it's just because they're earlier on in life, so unless there's already a known health issue, It's a great thing to go ahead and get that protection now, to go ahead and acquire more of what's financially available to us by getting a policy on a child prior to anything, heaven forbid, developing later on. So the answer is yes, you can, and I wouldn't say that you should get policies on your children and grandchildren as soon as you can, as big as you can, as often as you can. Here's a question that I have a screenshot of, because again, I take these questions from lots of different directions. If you have a question, please feel free to put it down in the comment section on this video. I will answer it in a future video, if not directly there, or both. But this question is, can you only borrow against your cash value? And I know where this is coming from. Every now and then I'll get this question where somebody just hears a snippet on social media and they'll come at me with this question. Now, again, I know that that's really early on. I know that you've not been in the Becoming Your Own Banker book, the source material for this concept. You've definitely not seen my presentation video at durhamtalents.com to ask this question, but I don't mind answering it. So some people think sometimes when they just hear something quickly or early on about policy loans, that they are leveraging the death benefit, that maybe if there's a $500,000, $1 million, $5 million, whatever the case is, death benefit, that they're borrowing against that. They think that they can pay a premium 1 month or 1 year and then have access to $500,000 of equity. And again, this typically happens because of how infinite banking and life insurance is spoken about out there in the wild of the interwebs. But what's happening is that when you pay premiums for and into a policy, you're paying premiums to a mutual life insurance company, you're getting a death benefit, guaranteed. And you're also building a cash value. And the cash value is just simply the net representation today of that future greater death benefit amount. So again, if you had a $1 million death benefit, and you'd paid a $10,000 premium, and you had a cash value of $4,000, $7,000, $8,000, whatever the number is, that cash value is just the net representation today, okay, today of that future greater death benefit amount. So it's the cash value of the policy that's being leveraged. You're leveraging your cash value in that policy to be able to have money from the insurance company that we, of course, are looking to use for our need of finance. And that cash value grows and compounds uninterrupted while we still have access to that policy loan from the insurance company. Both those things are happening at the same time. It's a beautiful process, but the answer is that policy loans are made possible because we have a death benefit that is represented today with a cash value, net representation today. This cash value is what we can leverage to have access to policy loans for us to go out and use money for what we're going to use money for. I hope that this has been helpful to you, to have a conversation with me about what it could look like for you to implement infinite banking into your household, your business, your investing. You can find me at durhamtalents.com. Otherwise, feel free to check out this next recommended video. Live and leave a lasting legacy.